Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson. Today, I've asked the Managing Director, CEO of Boss Energy, Duncan Craib, to come back and have a chat to us on the back of the announcement today of their final investment decision for the Honeymoon uranium project down there in South Australia. Duncan, good to see you. Thank you for your time today.
Thank you, Kerry. Terrific to see you too.
Well, big news coming onto the market today with the announcement of your final investment decision. Just give us a catalog. What was, I guess, the timing, the reasoning why now, and tell us a little bit more about it.
Thank you. We've been working to this moment for some time now, really, and it's a very exciting milestone for the company to achieve. But it was on the back of the positive enhanced feasibility study results that we announced in June last year that we immediately then went into the front-end engineering design work, which we completed at the end of March this year, which led into a very successful capital raise in which we raised 125 million Australian dollars. And now it was the right timing, really, to move forward with the final investment decision. So past few weeks, we have been working in earnest since raising the capital, but I really wanted to align ourselves with key stakeholders, including the state of South Australia, the government there. So we've achieved that, and we're now good to go.
Speaking of the government, are they supportive of the restart of Honeymoon and getting back into production down there in South Australia?
Very, very supportive. So fellow director Bryn Jones and myself on Friday afternoon, the 27th, met with the Minister for Mines and Energy, Tom Koutsantonis, and we had a half-an-hour session with him, really walked through the project, what the benefits would derive for the state, recruiting up to 100 people, for example, the royalties that would be paid, the taxes to be paid, etc. And he's extremely encouraged by the project and fully endorses it. So wonderful to see.
And look, I think it is good that government is behind it. One of the things you talked about was that front-end engineering design. How important was that to get that right to enable you to say, look, you know what, we're ready to go and get back into production with this?
To us, it's really important, particularly given the sort of the rise in inflationary costs, etc., just to keep tabs of your main costs. So really, for most mining projects, your definitive feasibility study or feasibility study is a defining moment where you've really worked out your engineering design and you've got a rudimentary understanding of the costs incurred with that development. Front-end engineering design, or FEED, is the next stage where you then really go into finer detail with engineering designs and working with the vendors or the suppliers for the major items of equipment. So typically mines will raise capital on the back of a feasibility study and then do the FEED work. Because we had a strong operating team in place, an owners team as we call it, we sort of jumped the gun, really. We did FEED before raising the capital. And we did that as well because at that point, having finished the feasibility study, the commodity price wasn't there to support the restart of the mine, but it is now.
Well, let's talk about the commodity price, because you are also the chair of the Uranium Forum for the Minerals Council of Australia. So you have quite a wide-ranging view on where we're sitting at the moment. For those of our community out there that are looking at it and hearing people talk about uranium, especially at the moment, Duncan, while we're in what I can see a lot of people talk about as an energy crisis. I mean, what's the bigger picture? Where's the price now? And why are you confident that there's a strength beneath this price?
I think, thank you. It's probably multifaceted, the response. I mean, I think the world really is moving to a net zero carbon type future, and I think that's really important. So we've seen the emergence or sort of codified practice within governments around the world to start nuclear power plant builds, whether it be small modular reactors, particularly in the UK and France, and China, but you're also seeing the extension of nuclear power plants, that their lives sort of extended from 60 to 80 years, for example, in the US. So nuclear is very much here to stay. But if you look back over the past few years, through the advent of COVID, it really did hamper uranium production, particularly in Canada and Kazakhstan, which are the largest producing countries of uranium. And then that rolled into the early part of this year when in January there was civil unrest in Kazakhstan, and Kazakhstan's the largest producer of about 40% of the world's supply of uranium. And then more recently, Russia's invasion of the Ukraine, which has then further hampered our potential supply of uranium through, for example, all of Kazakhstan's produced uranium goes through Russian ports, or Russia accounts for about 30% of the world's supply of enriched uranium. So it's what it's done is effectively these big concerns with geopolitical stability has really shaken the confidence of fuel buyers, and I think that's the key. So whether it be in Europe or the US, for example, the markets that we're targeting for the initial wave in the price ticking up, those fuel buyers are now looking to diversify their supply and lower the risk. And that's where Australia just stands in such a good position. I mean, we've arguably one of the strictest sort of mining regulations in the world, particularly over uranium. It's very well governed. It's stable. South Australia, for example, hosts the only two operating uranium mines, being Olympic Dam and Heathgate. Boss is now destined to be the third operating mine in that state, and as a result, Australia's next uranium producer. So I think to answer quickly, it's really just a case that we're a very geopolitically stable country.
Which puts the Honeymoon mine, as you say, the third one to come into production in Australia, in a very good position. How does it compare as a resource and a supplier of uranium to others, such as Olympic Dam and Heathgate, and also others around the world?
Well, I think we can compete at the current price. So the incentive price for new mines is touted to be in the industry $60 per pound. Honeymoon only has an all-in cost of $32 per pound. So we're profitable at the current prices. And we're able to do that because it's in situ recovery as a mining method, which is ESG compliant, almost 30% lower in carbon emissions. And also the fact that ion exchange. So when you look at ISR, in situ recovery, and ion exchange, that accounts for 60% of the world's current supply of production. So these are the mines that can operate in the sort of, call it low uranium prices. So when you compare to others, why I genuinely think that restart projects are the ones to back as a cycle picks up. The best time to bring a mine onto the market is at the start of a new mining cycle. If you look at the big BHPs, Rio Tintos, for example, but being there at the beginning of the cycle, you're able to really have that first mover advantage and seize upon the high as the prices really begin to rise in the commodity. So higher prices are needed to encourage new mines to come on. Restart projects can go quickly, achieve the higher price before the new wave of production comes on stream. So no, we're in really good stead.
You spoke that you raised 125 million not that long ago. Just talk to all of us about where that money will, have you got debt? Where's the money going to be going? How are you going to be doing it? Do you need to raise again? Talk to us about the numbers.
Thanks very much. So we raised 125 million. It was a really, really positive raise, predominantly through Australian institutions and very, very well supported. So what that accounts for really is that our CapEx requirement for the mine development is 113 million. And that covers that. There's no debt whatsoever. And we deliberately did an equity raise because had we chosen to go down the route of debt finance, that would have to be underpinned by entering into offtake contracts. So essentially then you'd have to sign up, say, the first 4 or 5 years of your mine life, or call it 80% of those first 4 or 5 years, add contracts with prices underpinned to the current price of the commodity. We believe that the commodity is going to increase. So it wasn't really in our favour to sign up that much production so early on, and hence why we went the equity route. Where the money's going to be spent is largely in 4 key areas. We're going to develop the actual well fields, the existing well fields. We're then going to replace the solvent extraction columns here with ion exchange. We're going to expand the water treatment plant, the RO plant. And then finally, we're going to add an extra kiln to the drying room to produce the superior U3O8 product rather than UFO4. So that's really where the CapEx will be spent. Really just to finish on that question, I think where most mines get it wrong coming into development, irrespective of the commodity, is they sort of underestimate the working capital that's required. We think we've budgeted correctly around $35 million needed for working capital. We have some cash remaining in the bank. I think the current cash is around 140 million net. But we've also got 1.25 million pounds worth of physical inventory.
Oh, yeah.
By selling that during our ramp-up period, that easily accounts for working capital. And if we have underestimated it, which I don't believe we have, but if we find ourselves in 12 to 18 months' time that we have, well, we've got the ability to sell some of that material and not go back to the equity market. So we're fully funded. There's no intention of debt going forward.
Just remind our audience, because some people won't know what you did, and I think it was in March of last year, you went out and purchased quite a substantial amount of what we call Yellowcake. Can you just remind us of what was the rationale behind that? And of course, now it's underpinning, as you say, any blowouts, I guess, especially in an inflationary environment, could happen. Just go back to that time and the decision to do that.
I guess around that time, we within the industry, we're very much aware that there's increasing demand for uranium, there's decreasing supply, there's a deficit in the range of 48 to 65 million pounds annually, where new production is required. And meanwhile, since Fukushima, there's just been a steady depletion of available inventory around the world. And that's what fuel buyers and utilities have been reliant on in the absence of primary production. So knowing that there's a shortfall of available supply, we were then sort of aware that the Sprott Commodity Trust was coming into the market along with other financial players, and we saw that the market would tighten. So with Sachi Davies, our colleague in France, who's one of the world top 5 uranium traders, we acquired 1.25 million pounds of uranium in March 2021. And really that was twofold. While we're long in uranium and we believe the price will increase, it was also to give us a competitive advantage when we negotiate with fuel buyers in our offtake negotiations. So for any new mine coming on, they may be a bit trepid or drive a harder bargain, thinking, okay, what if there's a slip up during your ramp up period? Therefore, we want a discount in price. Well, we can do away with that, because if there is any slip up during our first 2 years of ramp up, we've got the ability to feed in the shortfall of uranium from our physical inventory. So I think tactfully, that was a really good decision. And meanwhile, we're long uranium, so the price of that inventory is nearly doubled.
Oh, wow. Okay.
Yeah, so it's been really a good wise strategy.
You spoke about offtake. I spoke about the energy crisis. What are you looking at? Talk to us about the construction phase, what the timeline of that, and when do you start talking to buyers? When do you start that sort of offtake process?
Thank you. So really now we're go. The final investment decision's been made. By fourth quarter 2023, we'll be in production, and that's the mine development aspect that we'll be working hard on. But meanwhile, we're staying very close to the market. So our intention is to layer in contracts into a rising market. It'll be largely market-related contracts, which means that there will be a floor and a ceiling with the actual price correlated to the spot price. That's the way that the market's turned more recently. And I mean, to kickstart that process is one, Sashi, who I've mentioned, is continually engaging with fuel buyers, but I'm shortly tonight actually flying to Montreal, Canada for the World Nuclear Fuel Market Conference, which is an annual conference within the industry. I'll be presenting a paper on ESG for the uranium miner, but really the underlying motivation for being at that conference is that many of the global top utilities and fuel buyers will be there, and the dance card's full. They want to talk to us. They want to talk about Honeymoon.
Do you think that's changed because of all this disruption at the moment? We mentioned right at the start, Kazakhstan, Russia, Ukraine, and various other, I guess, unrest in the world. Do you think that that's put Australia firmly, even more so on the map now, and your timing could be impeccable?
I do. I think it has. I think that some of the feedback we've received is if there is a tendering process and that 4 or 5 different uranium producers tendering for that same contract, and it boils down that consider everything equal, price, volume, etc., but we can say we're in Australia, I think that puts us ahead of the queue. Absolutely.
What about exploration? We haven't touched on that at all. We've spoken about the current mine, the current resource that you've got there, but what about exploration? How do you expand it going forward?
Exploration-wise, we are still working on the satellite deposits. There's Jason, Gould's Dam. We've done some step-out drilling, and I'll announce the results of those in the coming weeks. But yeah, we've been active exploring, and we're going to continue exploring during the mine development stage. But in some ways, with rigs availability, we'll have to focus some of those rigs on more delineation drilling of the well field as we're now starting production. But yeah, we've got a wonderful upside. I mean, when you consider only half our JORC resource sits on the mine licence, and there's another 36 million pounds JORC defined onto satellite deposits, and then the exploration target of up to 190 million pounds. There's a lot to look forward to. But really, I mean, our goal long-term is to build a multifaceted mine. There's no doubt that we want to grow, we want to do M&A, we're aware of targets, we look at those quite proactively, but we have to be disciplined. Let's build the team as we're doing, get Honeymoon up and running, producing a cash flow, and then we can move forward.
I know that you don't have a lot of time, but a final question for you. How important is it for you to be the chair of the Mineral Council of Australia, that Uranium Forum? How important is that?
I think it's really important given the stage. Not only, I mean, I'm absolutely a huge believer in the industry, and I really want to encourage its growth, and I've got the capacity to do that. But it's for me, and I think the forum as well, being that close to production, you're really sort of entering into a new remit, and I think that benefits both the industry as well as the council and vice versa on the project itself. So a lot more involvement with Canberra and government, and I think all round it's very positive. But genuinely, I'm there to support the industry.
Yeah, and hopefully to educate people that it is zero carbon emission in an energy crisis. We should all be looking at nuclear energy as a fuel source. Let's wrap this all up in a bow, if we could, for our community out there, Duncan. Boss Energy, why is it right now a really good time for people to be sitting up and taking notice of what you're doing and the future?
Well, really, this will be Australia's next uranium producer. We're on the front foot. We'll have that first mover advantage. And underpinning that are the people that we've got within the company. We've recruited largely our senior project team, which has been a terrific result. Really, without any recruitment agency, we know the right people to align ourselves with. And now we're going to expand the operating team as we get closer to production, predominantly from within South Australia, but certainly Australia. And yeah, I think our timing hopefully is right, but it goes back to the best time to bring a mine on is at the start of a mining cycle, and we're very optimistic that we are at the beginning of a new uranium cycle.
Duncan Craib, it's been an absolute pleasure to talk to you today as you go in and announce that final investment decision. Means that the work just starts getting started, really. You'll be very busy in the coming weeks. Good luck over there in Canada, and we'll look forward to seeing you in the coming weeks. Thanks for joining me on the Small Caps.
Thanks very much, Kerry. Thank you.